people are joining slowly. Soon we'll be live. Hello everyone, hope you all are doing great. I'm Preeti, your host for today, and I'm excited to welcome you to this engaging and informative session on risk management technique. Now, I am delighted to introduce our speaker, Mr. Indranil. Sir is a senior director and head of risk and AML at Pine Labs, bringing with his deep domain expertise in digital new banking. He play a pivotal role in overseeing regulatory audits, compliance framework, and driving innovation within the bank's digital unit. With a strong strategic vision and hands on leadership, Sir ensure robust risk governance with enabling agile growth in today's rapidly evolving digital financial landscape. His expertise and insights are truly valuable in understanding how modern risk management is transforming in the face of digital disruption and regulatory shift. We are truly excited to have him with us today to lead this insightful session. Let's give a warm welcome to Mr. Indranil. Over to you, sir.
Thank you so much. I hope everyone is able to hear me loud and clear. And I'm really glad, and thanks to Preeti and the team for inviting me for this insightful session. Okay. So I have been given a topic that risk management techniques. Now, before even I jump into this, I will just give a quick round of introduction of myself. I think that Preeti has already done it. Currently, I'm managing Pine Lab risk and AML framework. And the purpose of, and Pine Lab is a regulatory organization. We call it regulated entity, RE. And we are into card issuance and merchant acquiring business. We have granted license from Reserve Bank of India, which is a regulator in India. And obviously from very long time, I was managing a lot of kind of different risk aspect. Now, when it comes to risk, and I have seen people, means whenever I talk to someone and they ask generally, what do you manage? And I say that risk, there is always a kind of curiosity that gets generated, that what exactly risk is. And when I say that I also manage the fraud risk, people actually try to find out that what exactly this person is trying to do in his career. What means, is that person responsible for all the frauds, or is that person responsible for stopping all the frauds? So it's very unique and very interesting topic, risk management. And this risk management, we work, and it is across the industry. Risk has a very vast and broad word, right? If someone wanted to define what is risk, it's very difficult to put a definition of a risk in couple of words. It's very difficult because every industry will have its inherent risk, right? And that is the reason the scholars, the market, or the educational leaders, or those guys who actually worked on risk, has defined risk in couple of broad category. One of the category which I worked on is fraud risk, right? That is what my domain is, fraud risk. The second kind of risk is enterprise risk. Okay, I will give you some examples so that you can understand what is enterprise risk. Then you have a regulatory risk. We often call it compliance risk, but we can call it regulatory risk also. Then we have something called brand risk. Then we have something called financial risk. Now, there can be many more, but just to have a boundary of this particular discussion, and we don't go all out on all the way, I just wanted to restrict myself to this primary 5 risk function broadly categorization, and then I will concentrate possibly on a particular thing. So first thing is the fraud risk. Now, fraud risk, you guys know, what is fraud risk? Someone is doing some kind of fraud. Now, that can be an external company, that can be an external person, that can be an internal employee, that can be some kind of vendor, customer, anyone who is trying to do fraud, right? For example, you are aware of lot of market news which is there currently, like Nirav Modi, right? Obviously the matter is still sub judice, but the claim that the bank is doing, that Punjab National Bank is making, that he has done some kind of fraud. So that's a fraud. And he was a customer of Punjab National Bank. There are so many examples where the internal person, internal employee of the organization has done something like that. You have seen a lot of movies on that, right? Like Harshad Mehta, like some kind of, he was colluded with someone in within the bank and done a lot of damage to the bank itself, right? In invalid DD and invalid bank guarantees have been issued. So there is a collusion between the internal employees. So that's a, again, an internal person risk. So that can be a broad. So everything comes into a fraud risk, where the definition of fraud risk is wherever the process has been deviated and some kind of unethical monetary gain has been achieved. That's a fraud risk. Then we go to the next category, which is enterprise risk. Enterprise risk is where a company, a big company or a mid SMEs, any company for that matter, they actually evaluate whatever they are doing and what kind of risk that is involved. I can give you a very simple example. You all heard of Nokia, right? I'm not sure how many of you even used Nokia phone before. Means I was little old now. I used to, I had a Nokia phone during 2006, I believe so. 2006, I was just passed out of from the college. So Nokia was the market leader there. There was no other phone. Samsung was there, but and Motorola was there, but I believe 90% of the market was dominated by Nokia. Okay, why I'm quoting Nokia here in a risk discussion? But today Nokia is no longer exist. It was overturned by any of the other companies that you can think of. Primarily, what has happened? If you say Nokia's Symbian operating system, the platform that the Nokia phone used to work, was replaced by Android. Now, what has happened? That means Nokia and Android is a free code, right? It is not a proprietary software of any particular company. It's not a Google own software, right? Anyone can use that and create phones. So Nokia failed to understand that there is a new software which is Android, and that is far more robust and far more attractive to the customers, and that they need to switch over from their existing Symbian phone to Nokia Android phone. That's a kind of enterprise risk. So if a company is doing some kind of business, there will be people who will identify what is the potential risk of that particular company from a, and that risk can be anything. For example, let's say they, any of the Indian company, for example, let's say think of any of the Navratna company, like ONGC is one of the star company of India, government of India, right? They are one of the company which are profitable out of many. They have a lot of units or companies in Africa or in Europe or wherever they find oil and gas, right? So they go there, they open there, they register themselves. So they have a very robust enterprise risk team who evaluate that what is the risk of doing business in that particular country, what are the local regulations, what are the local challenges. It is not only a risk comes out of the government, there may be some suddenly, so the enterprise risk may come back and give a, just to give you a sense that they can come back and say that we should not be going to that particular country because that country is unstable. Any point of time the government can be overturned, maybe some military coup can happen. So this is something what a enterprise risk guy may think of. Now, enterprise risk also gets into a lot of other aspect also. I'm just concluding the enterprise risk by telling, let's say as a company, we decided that we need to use a vendor, third party vendor, right, for some services. Now the enterprise risk will evaluate what is the risk that the company will get into in case we start using that third party service. What would be the impact, brand impact, in case the third party service company suddenly goes bankrupt? Will I be able to still deliver the product if I have created a dependency on it? So that's a enterprise risk kind of thing. Then the third item, this is regulatory risk. And I would request Preeti, if you can just ask the people to document any of the questions, and we can take it once I finish, maybe halfway, then we can take the questions.
Yes, actually, I have already told them, guys. Please, like, if you have any question, write it down in a Q&A tab, so it will be easy for us to.
Yeah. Now coming to the third category, which is regulatory risk. Often it is called legal risk, regulatory risk, compliance risk. So that risk is primarily takes care of the compliance part of any company. Whenever we do certain kind of business, there would be certain land of the law. It will be either a regulated entity or regulated business or a non-regulated business. What do you mean by regulated business? You can open a shop tomorrow in front of your house or anywhere you wanted to, right? Do you really need any permission from anyone? Possibly no. You can still open a shop. You may need to register yourself with a bank. You need to get some certificate, but there is no approval that is required, right? You don't get it. But can you do the same thing when you say that I would like to open a bank? You will not. So that means a bank is a regulated business. Bank is also doing a business, right? It's also a company. It possibly a private limited bank or a public limited bank whatsoever. It is also a company itself. They have their CEOs, board of directors, they have their employees and everyone. So how it is different from a shop? So bank is a regulated business. That means until unless the regulatory authority, which is RBI in India context, does not approve, you cannot really open a bank. And there are so many types of banks, right? We have payment bank, we have neobank, we have public sector bank. For example, State Bank of India, we have private sector bank, HDFC, Axis, ICICI. We have so many kind of banks, right? We have also payment bank. Examples are Airtel payment banks, right? So they have, and they are all got a license from RBI, and they are subjected to audit. So that's, now whenever you say that there is a regulatory entity, there are certain obligations that this units entities has to follow. There are certain compliances, there are certain rules. Those rules are primarily governed and dictated by Reserve Bank of India in Indian context, and we all need to comply to that. And obviously Reserve Bank of India do a annual or possibly whatever frequency they do that audit, and in case they find out that the entity is not satisfactorily able to demonstrate, they will put penalty. I'm sure most of you have heard of Paytm, right? Paytm payment bank, they also got a payment bank license. And what happened in 2024, 2024, RBI has withdrawn, suspended the payment bank license of Paytm. So they got the license, they started doing the business. Due to certain compliance issues, RBI has suspended their license. So the bank itself in a limbo right now. They cannot onboard anyone. They cannot serve any customer. They have to immediately move all their customer to a different bank. Now, that is also a regulatory risk. How? The company was doing business. The company has raised funding from the market for doing this. They possibly have given projection to their investors that we have a banking license, we are going to do this many customers, we are going to onboard this many customers, this is what our EBITDA profit margin would be in next 1 or 2 years, and all those things. Now, possibly they have not envisaged that everything will be gone in the year because the license itself is gone now. So, so it's not only always business. They possibly could not manage. Whoever the persons or team responsible for managing the regulatory compliance absolutely failed in managing that, right? Now, and that's the impact. They lost the license, they lost the business, and of course, a lot of people had been fired due to that. So that's another risk. Now, coming to the fourth one, that is the brand risk. Brand risk means any company. I'm not sure. It's a funny thing. Recently, how many of you has heard of the recent Coldplay concert where one of the CEO has actually been found out that he was cuddling with his HR head. I'm not sure how many of you. So what has happened in the Coldplay concert, somewhere in US, I guess so. One of the CEO, one of the big company CEOs find out that he was sitting and doing not very nice things with HR head, their company's HR head. Ultimately, what has happened? The company shares gone down. The brand of the company has taken a big impact, and of course, the CEO has to resign. Another wonderful example is Madam Chanda Kochar. She was CEO of ICICI Bank, and of course, there was the allegation that her husband got a kickback from Videocon Group, right? Because ICICI Bank was asked to approve certain loan to Videocon, and that loan got approved without proper due diligence, and the loan was excessive. Otherwise, none of the bank was ready to give that loan, and it was find out that Chanda Kochar was involved in that. As a CEO, she motivated or influenced that particular decision of giving loan, unjustified loan to Videocon. Now, whether it came out as a financial impact, because that is still to see whether, because Videocon is still there, it's not bankrupt. But the brand impact gone for a toss. The bank got a brand impact. Chanda Kochar was asked to resign from the post of CEO. The the prices of the share market of ICICI Bank got a heavy beating. So that's a brand impact. That means what is happening means the persons who are head of marketing, they're responsible for managing that, right? They generally manage. Means I work with Pine Lab. We have a team dedicated to just to follow and manage the social media. So anyone, means obviously any companies who are into servicing of customers, be it Amazon, Flipkart, Snapdeal, Pine Lab, whosoever, Google, you cannot make 100% of your customers satisfied, right? There will be a lot of complaints. And the best part today in today's world is, if you are not satisfied with the customer service, you simply put something, your grievances on X, or you put your grievances on Facebook or somewhere else, some social media. Now, it is very important that all the companies, you will see that all the companies take those kind of grievances very seriously, right? The moment you put it on X, the company will go out of the turn and will try to resolve your issues. Even if you possibly have written them multiple times to their customer service, they possibly have given you the same response, right? That as per policy, we cannot give you refund or so whatsoever the matter is. But the minute you put that on X, their response will change, their behavior will change, they will go out of the way to solve your problem. Why so? It's the same customer, the same issue. Why they are taking a different stand when you put something on X or Facebook? Because that's a part of brand management. When you are writing something 101 to their customer service, your email, no one has a visibility that what is happening, what is the problem, who is right, who is wrong. Nobody is care about it. You are the alone fighting the entire battle, and you are never going to win that battle. The moment you put that complaint, valid, invalid, ethical, unethical, I'm not getting into it. The moment you put your comments on social media, there are 100 more people, 1,000 more people reading that. By reading that, it's the brand is getting impacted. If I was thinking, let's say, just give you a simple example. If I'm thinking that I wanted to buy a computer, a laptop, and I wanted to buy a Dell laptop. And the day I wanted to go to the shop and wanted to buy a Dell laptop, and I just got a message, Facebook or in X, that somebody is writing that I bought a Dell laptop and I'm facing huge issues. They're not solving it. Will you buy that? I will not buy that, right? That's a brand impact. That's so how they think. If I able to solve this person problem out of the blue, and I ask the person to take back that complaint from the social media, I will possibly be able to sell more laptops in the market. Just by not refunding this one person, I'm going to lose 100 more customers. That's a brand risk, and that is how a brand risk get implemented, managed. The last part of the risk is financial risk. Financial risk is again very simple. Now, it is direct. It is more direct, where any of your decision may result in some kind of financial risk. Financial risk means you are investing certain amount. You and all of you, possibly you are all out of your college or into your college or freshers. You all manage this financial risk every day. However, you possibly never thought about it. What is financial risk? If you wanted to go, let's say you wanted to travel to from your hometown to Delhi, right? You have to think that what should be my way of going there. Should I take a auto? Should I take a car? Should I take a flight? Should I take a train? And what will influence these decisions? Your ease, your time, and your comfort, and the assurance that whether you will be able to reach there, right? That is some kind of financial decision, because ultimately you have to ensure that you take the best decision. So when company runs the organization, they also need to take a lot of decisions in between, like investments, vendor onboarding, customer onboarding, new products. So that's a financial risk. Let's say we came out with Pine Lab come up with a new product, right? Let's say new device, new financial device. So the financial risk could be, will that particular device be sold in the market? Will there be any demand? Can that device be compromised and some kind of fraud can happen? So that's a financial. Primarily, the financial risk is handled by the finance team of the company, and you will see that a lot of companies will have finance controller or chartered accountant or something similar to it. They generally manage the financial part of it, that what should be. So whenever some, for example, they also manage the incentives, the salaries, the bonuses, the hiring, all those things, because they have to ensure that they do not go out of the way. They have a budget and they have to ensure. So that's key uh, five key broad understanding. So I will take a pause now, and I'm not sure if there are enough questions for me to answer. If there are some, I can
Yes,
take them.
yes, there are. First one, can you share the risk management model best suitable for manufacturing sector?
So it is a very subjective question. Now, when you say manufacturing sector, I can, and there is no single formula, okay?
Hmm.
Because please understand, when you say manufacturing, you can say that I am manufacturing a big vehicle. I can also be into a manufacturing of a very small, possibly needle. So when you say that, is there a formula available which fits into everything? The answer is possibly no. There is no specific formula that can fit once in for all, and that's the biggest problem statement for risk also. Otherwise, this industry could have been very easy to solve, right? If you see in many majority of the, and this particular discussion is on the techniques only, right? When you say techniques, I believe you are talking about that particular formula or any software that is available. The problem statement, and obviously I do not have much understanding of the manufacturing. If you see, I am always with the payments industry and the neobank. Manufacturing is something not my cup of tea. But what I'm trying to explain here is, even if it is a neobank or any kind of bank or even a payment organization like the company currently working for, there is no single method, tool, formula available which we can simply invest and implement, and we can say that we are assured that there cannot be any risk. The problem statement here is, what exactly we are trying to solve? We are trying to solve potential frauds, potential misjudgment. And the problem statement here is, if you talk to anyone, the fraudster is always ahead of the organization. So and I'm sure that you have heard people that today people has lost 1 lakh rupees, 2 lakh rupees, sometimes 50 lakh rupees. And when somebody asks that what has happened, they will possibly say that somebody called me, somebody asked me that your one of the modus operandi was running a months back only, that okay, your child has been arrested due to some kind of very severe charges, and in case you wanted to ensure that your child, we are not fine as a police will call them, so-called police, they will say that your child has been arrested, your kid has been arrested, and in case you don't want to us to press charges, you have to make certain money. So the problem statement here is, we primarily work on in this particular domain, right? We work very closely with the home ministry and all the LEA. LEA stands for Law and Enforcement Agencies, to devise way to protect this kind of poor people. We have seen people who, I remember one fine day I got a call from one of my friend. The poor person is only one single member who is earning. His salary is 15,000 rupees. He received the 15,000 rupees in his bank account on 2nd of that particular month, and the very next day somebody has taken out the entire 15,000 out of his bank account. And he was like, he don't even know that what to do in the very next day, because he has to survive the entire month with that 15,000 rupees. So the problem statement here is, what we are trying to solve is, how can we create a framework to avoid this problem statement? Now, what we are trying to do in payments, we are saying that OTP, first thing is OTP. Initially, it was a OTP, we used to send that OTP for 30 minutes. Now we say that the OTP will expire within 1 or 2 minutes. Your devices from using which you do a payment, right? QR payment like Phone Pay, Google Pay, or whatever pay. These are device bind software. That means earlier, what used to happen, somebody will hack into your phone, block your phone, and then and your SIM will got deactivated, and suddenly you will see that your bank account got compromised. What used to happen? Somebody will hack into your system, your phone, deactivate your SIM, take a equivalent SIM or create a virtual SIM from his own mobile number, and that particular mobile number will now start getting all the banking OTP, and he will start doing transaction. So one of the solution we came out with is device binding. So that means that the system, the backend system which sends the OTP and also responsible for connecting that particular device, phone pay application, Google Pay application, or any banking app, is bind to your device. If you see that you suddenly buy a new phone and you deinstall your you deinstall that particular app, and you say it is the same mobile number, but you use the new phone for installing the same app, it will ask you at least 10 new questions, because the system at backend is able to understand that it's not the same phone. So the problem statement here is, we unfortunately was not able to create a model which is, which we can say that this is the perfect model which you implement and you have a risk-free life. The problem statement is, every time we are coming up with some kind of solution, fraudsters are also able to find a way out of this. They also come back with a new format. a new modus operandi. So what we say in this case, that it is always an ongoing war. So it is never going to end. It's never going to end. It is always a kind of a sometimes we ensure that our controls are too comprehensive, so all the frauds get down, and suddenly they will find out a loophole, and they will start taking out money from bank accounts or people's wallet. That keep happening. So now coming back to your original question, whether we can provide a simple formula or a tool. So there are so many tools that is available. I can provide you offline the name of the tool in the manufacturing sector. But the problem statement is the kind of industry I represent, which is neobank and payment, we really do not have a tool. In the manufacturing unit, there is no innovations that is happening. Their product remains same, right? The variance means if it is a car manufacturing company, they sell car only, right? They don't start selling something very different. Now you can always say that the car version of the car, the model of the car is different. In that case, they would possibly need a enterprise risk, a brand risk, a financial risk, and of course a regulatory risk. But they will possibly is not that dynamic. Their risk mitigation mechanism would not be that dynamic than the financial risk which we face in current scenario. My answer for that.
Thank you so much, sir, for giving a answer. Okay, so we have another question asked by Apeksha. She's saying she wants to know more about new bank. That what is new bank?
Okay, so what was happening? I just wanted to go back a little back in the time, possibly couple of years, a decade at least. In 2022, not 22, I'm sorry, 2012, 13, 14. Earlier, the payment industries and all the financial services was provided by the bank only. If you go back to 2012 or 2010, you only have SBI, HDFC, Access, private banks, but they are all banks, right? If you and all the kind of financial service, and when I can say financial service, any kind of investment, any kind of savings, deposit, loan, credit card, debit card, anything, it is primarily handled by a bank. And that bank can be a small bank, big bank, payment bank, whatsoever bank, but it is always a bank. Now, the problem statement was that point of time, these banks, and I remember, I'm little old school. I remember when I went to a public bank to open a bank account, they said that you have to come back with 30 different documents and a introducer, right? Means I have to bring someone who already have a bank account in that particular branch. That's and obviously I went to Delhi. I did not knew anyone, and I needed to open a bank branch. That's the problem. All I'm trying to say here is financial service was primarily dominated by the banks, and they have a draconian law and processes. And these banks never thought about customer success, customer experience, ease of doing business, right? Now, if you go to a SBI branch today, and if you possibly walk up to a SBI branch 10 years back, you will find out the difference, right? Now, what has happened is because most of the bank, and myself has worked in a bank, so I know banks are very resistant in taking certain dynamic call on change of the system, right? And that's good also, that bad also. I don't want to get into a discussion why it is good or why it is bad, but the only point is every bank, the name bank suggests it is trust. The alternate meaning of bank is trust. Now, whenever there is a bank, that means you have deposited your money in that particular bank, and that means you have trust in that particular bank, right? I really don't know. Everyone, you have bank account. Most of your money and your parents' money is residing in that particular bank. Have you ever thought that that bank can also vanish tomorrow, right? There is no absolute cash which you have. Means it is not a deposit box where all the money is there and you suddenly go there and take out that box and walk out, right? That doesn't happen. Everything is digital. So for example, any of you has a bank account, you log into your account and you are able to see that 1 lakh rupee, 2 lakh rupee, 3 lakh rupees, right? That is digital. Have you ever thought that that is a digital display? What if that digital display gone for a day? Or for that example, the application software that the bank is managing, which is having the ledger that you have, their ledger only tells you, na, you have 1 lakh rupees or 2 lakh rupees or 10 lakh rupees. What if that ledger got compromised? What if some hacker goes in and make everything zero? They don't have any other options. Your entire life saving or whatever your money you have in the particular bank is zero. You go to that branch ATM, they will all show you don't have balance, but you still have that. I don't know how many of you ever thought of that. I'm not saying that you don't need to, you need to worry about it. Don't worry. Your money is absolutely safe. The point I'm trying to make here is you just see a bank screen or a OTP message or a SMS message or your banking screen, and you are satisfied that my money is safe. But you never knew that what are the risks that may involve. Somebody can hack in, the owner of the bank can run away with all the money. They can transfer the entire money to outside using Swift. So many things can happen, right? And that is why the point I'm trying to make here is, and to handle all those kind of risk, bank do not change, right? If they have a tool, if they have a core banking software which is written in COBOL or which is written in mainframe, which is written in Oracle, SQL, whatsoever, it is very difficult for us to make that change because they know that the entire bank is running on trust. If we do something, try to do something which may impact the trust, my value in the market will go down. So the point I'm trying to make here is the banks were not very keen to work on the customer experience side. They said that no, my work is to give assurance to the customer that your money is safe with me. I will invest in securing that particular premise, that particular software, instead of giving you a wonderful experience. So if I'm asking you to come back with 30 documents to open a bank account with an introducer, I'm okay with that. I really don't care that whether you have 30 document or not. But the most important thing I care is if you have some amount with me, how I can ensure that amount is safe and sound. Whenever you come back, maybe after 10 years, I will still be able to return that money to you. That's a bank. Now, in those years, what has happened? Customers also got inclined to different experience, and lot of small banks, because they did not have funds to invest on new technologies, that is one of the reason. And big banks also do not want to change their core banking software. They actually associated with very small banks, small companies who started handling the customer experience side of it, right? That means what is happening, if you are opening a bank account, there would be companies who will give you the interface to open the bank account. I can name many like Uni, Jupiter. These are all neobank, right? Jupiter is one of the neobank. What they do, they don't have a banking license. What they do, they have a app. Using that particular app, you can open a online FD, you can open a online current account, you can open a online savings account, you can do anything, right? Now, FD, we all knew that if you wanted to open a FD, you have to go to the bank and you have to do this. If you wanted to open need a DD, demand draft, you have to go to the bank. Now, these companies like Jupiter and all actually associated with the bank and said that let us handle that part. While the money will still be with you, the bank, and the core application, core software will still be with the bank. We will handle the interface application which is with the customer. What has happened? What is and why the bank has agreed in the very first place? Bank thought that in case I collaborate with Jupiter or anyone similar, the experience that the customer will get will be multifold, and I will get more and more customer, right? I have, for example, a small bank like Ujjavan Small Finance Bank. Example, they may have 100 branches across India. Okay. Now, if they think that if I'm able to associate with Jupiter, and Jupiter is able to create that online mechanism of creating account, I don't even need those 100 bank branches. I will suddenly see that huge kind of customers are coming and opening, and I don't need to serve them through branches. I don't need to open another 10 branches because everything is happening digital. That is what exactly the neobank is. Neobank means they are working as a layer up on a banking services, right? They will give you the banking services, but they are not the bank. They will at a back end will have a connectivity with any of the bank, and most likely there are applications, there are neobank who works with multiple banks. That means if you log into that particular neobank app, you can open a bank account with, and I've seen that they're saying you have extra money, I can give you 7%, 6%, 10, 8%. How they are able to do it for the same 10 year? They're able to give you a single bank. If it is SBI, on 10 years FD rate will be same for them, right? They will not going to differ. But what they are doing is they are aggregating the banking services. These neobanks are aggregating the banking services. That means from a single app, you are able to see the interest rate that SBI is giving, ICICI is giving, HDFC is giving, and any other bank is giving. So you don't need to go to five different branches of the different banks, and if to you don't need to find out that what is the best rate. From a single window, you are able to see that. It is something like you have a branch in your hometown, and that is a aggregated branch. This was never successful in India. Aggregated branch means that branch you can across all the bank, means you, if you are a SBI customer, HDFC customer, ICICI customer, no matter what customer you are, you go to that particular branch and you can work. But that never worked, right? In India, that will not work because that there is a technology nightmare and there is security nightmare. None of the bank security team will allow that because there will be collusions and all those kind of things. But this actually clicked when this neobank concept came. This actually worked. So this is what is a neobank, a layer ahead of a core bank. A particular bank is managing the customer interface. That's a primarily example of a neobank.
Okay, so we have so many questions, and there's a one question which is asked by many people is related to career, ki like how they can enter like as a fresher, what skills are needed, how they can get job, and like if you can tell them.
So again, it is a very vast career. Unlike a CA, unlike a engineer, risk, you see the problem statement here is there is no educational institute who gives you training on risk, right? You find out that is there a course on risk, is there a masters in risk, is there a specialization in risk? Possibly they will all say yes, but the problem statement is risk is always a part of, if you doing your CA, you will see that there will be certain element of risk that is involved. Financial risk will be involved, enterprise risk will be involved. But as a core domain risk, that is a problem statement. We still don't have it. Now coming back to the career. Yes, as I told you, there is a huge career opportunity that is available. What you need to do is you need to first clear your graduation or engineering your or CA, and most of the cases I have seen that it's the chartered accountants or cost accountants or engineers later shifted to a risk domain. If you see all the CROs in the banks or any companies, any be it a manufacturing company, financial company, or a service industry, all the CROs are basically either an engineer or a chartered accountant, mostly chartered accountant. So basically, you need to understand the business itself. So first thing is you need to understand the financial risk. That's the base. And then you have to increase your understanding, because risk is always so dynamic. The problem statement is risk is so dynamic. It is for every industry, it has a different test altogether, different topic altogether. So anyone, for example, I manage the neobank risk or a payment risk. If you ask me, Indranil, will you be able to do the same kind of task or same kind of delivery if I move you to, let's say, Tata Motor? The answer is absolutely no. I will not be succeed there, because they have a very different kind of risk, right? Anyone who works in Tata Motor or Mahindra and Mahindra or any company for any service industry, for example, service industry would be TCS, right? They are a software service, a SaaS company. Their CRO, will they be able to succeed in a payments company like I work currently? Possibly no. So what the matter I'm trying to explain here is, because there is no course that is available, there is no training institute that is available, you have to enter the industry as a either a CA or an engineer or a finance professional, and then subsequently upgrade yourself to a risk professional. That is how it is. Unfortunately, we do not have any course where, even today also, whenever when my product team or my engineering team need people, they go to the college and they know that what are the, either it is electronics or it is computer. That is what they need to look for when I'm talking about campus hiring. We don't do a campus hiring. Risk doesn't do a campus hiring, because I know that that person will have no clue, even if he is a wonderful engineer, maybe first boy in the class, but they will not have any understanding because they don't teach that. So what I need to do is, I need to figure it out within my organization, within my peer organization, competitors, that who is the person who is outshining, and I need to pick that guy. So that is how it works. Unfortunate or fortunate. Now coming back to the career, yes. Can So we used to joke, in any organization, the last one who will lose the job is the HR. So even if the company is bankrupt, the HR will still be there, the legal will still be there, until the time the company has some asset, the risk function will still be there. So yes, it has a great opportunity, and I have not seen people get intrigued by the name of risk, but they really don't understand what exactly this means and what exactly this requires. And what I personally believe is, like an artist, right? Can you create an artist? If I say that, okay, there is a kid, can you make train him and make him an artist? The answer is no. There are certain things which comes within, right? That is something I believe risk is. There are certain things which is coming within, and you cannot really train that person that way. Means it's not a pure play engineering or pure play mathematician or pure play legal, because all these sectors have a documentary study guide. They have to read, but in risk there is no such documents available where I can you please read all these five versions or books and you become a risk expert? The answer is no. We don't have anything. It's all acquired, it's all assumed, and it's all experience. That's the answer.
Actually, a few people wants to know like about your journey.
Yeah. So my journey is very interesting. I was never a very meritorious student, right? But I'm from Jamshedpur, city of Jamshedpur. I'm not sure whether you heard of that particular city. It's a manufacturing hub. Tata Steel, they have their factory there. Even Tata Motor, all the trucks that you see, Tata has that comes out of that particular city, right? So we have two big factories there. One is Tata Steel, and the other one is Tata Motor. My parent, my dad, my granddad, everyone used to work there. Because there's a very small city, the understanding was always that people works generation in that company only. It's very different, guys. I'm just taking time out. I'm possibly deviating from the subject, but all I'm trying to say here is, employee of Tata Steel or employee of Tata Motor, their integrity towards those companies are very different. We will never be able to comprehend that. They will work, their kids will work, their grandkids will work, and that is how they will never be a situation where they will say that I will try to leave the company, I'll go somewhere else. No. And the corporate also and the employer also will take very, very good care of those employees. That's I have seen. That is what I have seen. And it was very natural for me to start working in Tata Steel. But anyway, my luck was having something very different from me. I wanted to do something different. I fought with my dad, my parents. I came to Delhi, and I wanted to be a IPS officer. So I appeared for UPSC. I cleared the prelims twice, could not clear the mains. After two times, I failed mains, and then I thought that I should not be wasting my time and my career. And then I suddenly started looking for a job. That point of time, there is a company called Capital One. It is a US based bank. They actually looking for they actually opened a captive center in India, and they wanted to have some people who can manage their risk and other services from India. And I was got opportunity, and obviously that actually changed me, because the client came from US. They trained us from the banking industry, what is disputes, what is all the regulatory environment that is there, customer service, and so on and so forth. Anyway, that's there. From there, I worked for a couple of years. Then I moved to Google. Google used to have a payment gateway, Google Checkout. Not in India. It's there in US and UK. So I was managing that process from India. I had a team, and I was managing the risk and chargeback disputes. Then I joined a company in 2012, PayU. PayU India is one of the payment aggregator, payment gateway. You can say a newer payment gateway. So we used to onboard lot of companies like Snapdeal, IRCTC. Whenever you do an online transaction, you will possibly be transacting using that particular payment gateway. After spending a lot of time in PayU, I moved to RBL Bank. RBL is a bank. That is the time when I moved to Mumbai, and I worked with RBL Bank as a head of their enterprise risk. And after spending almost 4 years in RBL, I moved to Pine Lab as their head of AML and risk function. So currently, I'm managing. Pine Lab has a business in India, in UAE, in Malaysia, and in Singapore. I manage the entire risk function for the entire group. So that's quite a journey for me, and I'm loving it. I don't know what is there in front of me, where I'm going to go next, but being a true risk professional, I really love it. Every day is a new, and trust me, guys. Sundays and Saturdays are the difficult days for us, because any fraud attempt will always happen on Saturdays and Sunday. It doesn't happen on weekdays, because the fraudster also knows that people are aware, they are in office. They attempt Saturday night or Friday nights, right? Because they know that people are either partying, or the teams will be possibly taking a day off, a kind of thing. And for a risk professional, Saturday Sundays is always very, very difficult. So if anyone interested to work in risk, there is a element where you have to compromise on your normal life also. This is something, obviously, every for example, doctors also, right? If you are in an emergency doctor, you cannot say that today is my day off, I will not be coming, and I cannot help the patient. You have to go. If you have you become a doctor and your patient admitted in the hospital and suddenly he is not well, you have to go. That's risk also. You cannot say it's 6 o'clock, I'm going home, sorry, I cannot help. No, you have to be 24/7 there. So that's risk. But like any other risk professional, I'm also like the profession, the task, the challenges. and super happy with the work. That's I really don't think that if I can do anything else. If tomorrow somebody asks me that, okay, enough of risk, can you move to something else? I really don't know what I can do apart from I don't know what to do.
Okay, so another question is asked by Mr. Vishal. He's saying, "Good afternoon, sir. My organization is a
No,
customer of Pine Labs. Can you please elaborate on common risk assessment point and much further on risk mitigation?"
sure. When you say customer, you must be a merchant. I assuming so, right? So now, whenever we onboard a merchant, right, we have a very elaborate merchant assessment framework. So what we try to do, and so first of all, even before we talk about the merchant assessment and the process, you need to know why the assessment is required in the very first place. The assessment is required because we take the liability. We, in the sense, the Pine Lab takes the liability of merchant in front of the customer or Visa and Mastercard. That means if a merchant, what we do, we enable the merchant to accept payments, right? Now, if the merchant has accepted the payments, haven't delivered the goods. I can give you a simple example. You see a lot of time in Facebook. If you are in Facebook, you see a lot of advertisement that says that there are nice watches there, nice shirts, nice t-shirts, nice, so many things, right? And they are not Amazon and Flipkart. They will take you to a native app. Possibly you have never seen that app, but still they offer very nice price and all. And I've seen people and myself has purchased once. And of course, what has happened is either the goods not arrived or wherever the goods actually arrived, it was very different from what was published. So what if it is Pine Lab, if it is a payment gateway Pine Lab, and if the customer is not happy with the product and goods, it is the Pine Lab who takes full responsibility, right? That is how the framework is. So that means that whenever I onboard a merchant to accept payment through Pine Lab, I takes the responsibility of the goods and services also. So I need to ensure that I don't end up onboarding a merchant who is otherwise not a genuine merchant and start selling fake products, right? Because I take the responsibility, and that is the reason exactly where I need to have a very elaborate merchant assessment framework. Without getting into too much of detail, I need to find out what is the intent of the merchant, whether the merchant is genuine, if the merchant has an establishment, whether the merchant has some kind of existing framework or is a fresh new merchant, and then only I will either approve that merchant or do not approve that merchant. That's primarily what the merchant assessment is. What are the models that we use? Primarily, there are so many things we use. I can give you some sense, obviously, without getting into detail. So, what we do is we have a tool where we put your email ID and your phone number, and we generate a score. Now, when I put your phone number, it will check whether it is a postpaid or prepaid. It will check whether that is a if it is a postpaid. So how we derive any risk assessment from this information? If it is a postpaid mobile, I should be I should not be worried, because postpaid is, that means some other entity, which is Vodafone or Airtel, has already taken a credit call on that particular customer because they have given a postpaid connection to them. That means they have done some due diligence. Postpaid means you use and then pay, right? That means there is a credit element to it. So if another organization has already given a credit element to a person, that means that person appears to be genuine. But if it is a prepaid connection, it should be a red flag for me. Then I will get into the next step. The next step is the vintage of that particular mobile number. When that particular mobile number has issued to that particular customer, is it fresh within 1 month? Or if it shows that even if it is prepaid, but it is 4 years old, I should not be worried about it, because if a customer has a prepaid number for last 4 months, 4 years, I think it's a genuine customer. But if that particular number is issued just a month ago or 2 months ago, it's a red flag for me. I will definitely wanted to know more about that. Next, I will check the circles. If I see the phone was earlier in Bihar, then move to, I'm not talking about the towers, huh? I'm talking about the circles. That means you earlier used to stay in Bihar, your phone number was registered in Bihar, but then you moved to Mumbai, and you got a new number. You either moved that number or you got a new number. So that number has moved from Bihar circle to Mumbai circle. That's a red flag for me, right? That means this person is not a stable person. He has moved recently. He has migrated, right? Then the next thing is we have certain registry where we can find out how many times this number has been reported as a fraud. We also check with, if you have a number, any of you, right? You, what do you do if you have a phone number? What do? You will have a phone, you will have a Amazon account, you will have a Flipkart account, you will have a Facebook account. Everywhere you will have your phone number registered, right? That is what you generally do. If I see that phone number is appearing in those apps, social media apps, and we also have the capability to fetch the names, and if those names are matching, I will be sure that this is a genuine person. If there is a person who is trying to do a fraud with me, we will find out that all those informations, all those tools that I just mentioned, there will be a red flag. So that is primarily how the underwriting works from a onboarding standpoint. There are many tools. This is one of the tool I'm just mentioned. There are many other aspects to it, but obviously some other day we can discuss this in detail.
Yes, sir. Okay, so there's a one more question which is asked by many people. It's about AI in risk management. Like, is it helpful, or it is causing many like problems or whatever? Like, there's many questions related to this.
So it is a very interesting question, and I would like to define it in a way. I'm not sure whether people are ready for that answer. AI is super helpful in risk management. Generally, if you ask any this particular question to anyone else, anyone from a manufacturing unit or somewhere, they will always say that no, possibly AI will take my job. But for risk, it is not, because in risk, first of all, the problem is so big. No matter what we do, it is always, we are always far behind. So AI is something, there is no dearth of people. The problem statement is so big, the issue is so big, the risk is so big, we are actually running behind, lagging behind, and we need additional support. And there the AI comes. I can give you my example, my organization example, right? We have a tool, we call it FRM, fraud risk management. Or for that matter, I will give you another more relevant examples. All the transactions that you do online, right, or offline. Offline means when you go to a shop, you swipe your card, right? You go to DMart, you go to Vishal Mega Mart, or you go to any phone store or anywhere you go. You either tap your card or you swipe. Or online, you purchase online, Amazon, you purchase some phone, you purchase some kind of clothes or whatsoever, right? All this transaction goes through a particular system. Okay, that's a AML system. AML stand, that is another demo, right? Risk is one side and AML is another side. What why I'm bringing AML here is because I wanted to tell you the purpose of AI and the help that AI can bring here. What is AML? AML means anti-money laundering. So all your transaction goes through a particular system, and the system wanted to identify whether it is a genuine transaction or there is a anti-money laundering aspect to it. Now, what is anti-money laundering? I don't, that itself will take 3 to 4 hours if I start lecturing about anti-money laundering. But just to close the loop and so that you can have a sense, when you wanted to make the black money as white, you need certain tools. Simple example: you are going to purchase a house, right? And it happens. The price of the house is 1 crore rupees. Your agreement with the person who is selling, you are the buyer, would be, I will pay 60 lakh rupees in white, 40 lakh rupees in black. What that mean? Your agreement will show the price of that house is 60 lakh rupees, and but you are actually paying 1 lakh rupees or 1 crore rupees, 40 lakhs extra. Why you are doing that? Because you have to pay stamp duty and registry for on that is equivalent to reciprocal to the price of that house. So the less the price, the less the tax you pay to the government, right? Let's say it's 7% or 6%. If your price of the house is 60 lakh rupees, 7% of 60 lakh, if you are paying, if you are declaring that my price of house is 1 crore rupees, your taxes also go up. In material, who pays the tax? That is not the problem statement that is we are talking about. Ultimately, what I'm trying to say here is there is a cash component involved, and this happens in everything. Why not? What the example I have quoted, because a very simple common man also, without understanding that they are doing an anti-money laundering activity, they do that. Today, you purchase anything, you go to a jewelry, right? You say, na, what the jewelry say, sir, पक्का रिसीद लोग होते 20,000, पक्का नहीं चाहिए तो I can give you on 18,000, and you very easily say हाँ दे दो किसको चाहिए, but you don't understand you are actually promoting a black money, right? Now let's say that happened, that transaction has happened, you paid 40 lakh rupees cash, 60 lakh rupees check, DD or whatsoever. So ultimately the transaction has happened. Now that 40 lakh rupees cash that is there with the builder or the seller, he need to get that amount into his bank account, right? That is a black money. He cannot just walk up to the bank and deposit that amount in the bank account. That cannot happen, right? Because the income tax will immediately find out that from where this 40 lakh rupees came. So he need to channelize that. How the channelize will happen, we call it placement. He will now, what we'll do is, generally what happens, we have seen, he will possibly hire 10-15 people. He will purchase mobile phone from Amazon. Example, this is just an example. Amazon mobile phone. He will create maybe 100 different user account, 100 different mobile number. He will buy maybe per account 2 mobile, 3 mobile, 4 mobile. He will all buy on cash on delivery. Okay. The moment the phone will come, he will give the cash to Amazon. That is how it works. Okay. And after 1 day, they will return the phone. Whenever you return the phone, what will happen? Do you receive the cash back? No, you don't receive the cash back. They credit it in your bank account or in your Amazon wallet. Now, once you give the cash and you receive the amount back to your bank account, it becomes white. So from black to white. So, but what has happened? You actually channelize that transaction. Instead of one account, that builder or that seller has actually hired 40 different people, or possibly himself has gained access to 40 different mobile phone, created 40 different Amazon account, buyer account, and did that account. So there are tools, and we also know that there are tools which identify this kind of behavior, and then the investigation will happen. So that tool will tell us that even if these transactions are coming out of 40 different person, there is a trend which is linking everything to the same thing, and possibly there is a AML. So what we do is, if our AML system gives this information, our responsibility as a regulated entity is to send this information to ED. ED stands for Enforcement Directorate. ED will then figure it out. We don't do, our obligation is just to report. We don't do any investigation. We are not the enforcement agencies. It is ED who is the enforcement agency, and of course, if there are certain other element involved, criminal things are involved, maybe terrorist financing or not, then the CBI will be get involved. But if it is purely financial, black to white is happening, then ED. If there is some criminal and terrorist funding is happening, then CBI is also going to get involved. So all I'm trying to say here is, the tool that we talk about, we have those tools, right? We always work, but is this tool good enough? Is this tool enough to identify? Am I going to say that we are able to identify all these kind of transactions black to white? The answer is no. Then what is the solution? So I would say 90% black to white attempt are undetected. We cannot detect. Only 10% we are able to detect. How can we detect the remaining 90? With the use of AI. AI is so powerful because today what happens? We all the identification happens with the mindset of the people. It is my learning, right? If I feel that is a alert, I will report that. But in AI, and our problem statement with the human people is our knowledge, not knowledge, our memory is very less. We cannot process data over apart from couple of days. AI tool will possibly process data for last 5 years and then come up with an alert. But the same thing if I see or any associate sees, I will only think about ये तो कल भी हुआ था परसों भी हुआ था तो ये आज भी हो रहा तो appears like some kind of fraud. Okay, so there in the risk in AML we need AI because it is AI only which will help you. And what we are having is in the AI we are also trying to work when in the banking app. In the banking app also we are trying to involve the AI where we can ensure that because what happens today banking transaction gets authorized through a OTP. Now OTP can get compromised, but if we can make that app intelligent enough to see if the camera can switch on and if it able to see you and your facial expression, because there can be a situation where the gangsters are holding you on gunpoint and asking you to authorize a transaction. So AI can read your facial expression, your pupils, your other expressions, and can also be able to tell you that whether you are under duress, under pressure, under threat, or you are basically a normal independent person. Within that, they can authorize a transaction or cannot authorize a transaction. So that's primarily AI. It's a huge subject in itself. We are working with lot of companies. There are a lot of new fintechs that are coming with lot of AIs. The example I told you on emails and mobile phone intelligence, they now using AI they generate a score, and that score will tell us whether that is a fraudulent transaction or a non-fraud transaction. So how the score is coming into picture? It is all through AI. So that's something. I'm not sure whether Preeti is there. Okay, I can see someone is asking with the worldwide economic crisis, is launching a new product to the market riskier than giving the model to already established company? Okay. Uh, again, I don't see there is a financial or economic crisis that is going on. Because the moment you have a financial crisis, when you say financial crisis, what exactly that means is some one of the indicator for financial crisis is the inflation will go up, right? People will lose their buying power. In a financial crisis, you will see people don't want to spend. People have money, but they don't want to spend. That is not happening in India, at least. I cannot talk about US or somewhere else, but at least in India, I don't see there is any financial crisis. The market is steady. The Nifty and others indicators are pretty good. So I really don't see there is any reason. And obviously, the financial market and the economic system also depends on the government also. Without getting into the other aspect of the government, at least we have a steady government that ensures that the financial reforms are happening, and there is no financial crisis or economic crisis that I see currently in India. Now coming back to the second part of it, I believe that new product to the market riskier than giving the model to any already established. So you are saying that whether you wanted to launch it yourself or you wanted to sell your model to someone else, It again a very subjective call. I think right now, if you wanted to come back, you wanted to launch your product in the market, I think this is the right time, because a lot of fintechs are looking for the right solution. Even we also FineLab, in FineLab, and I speak to a lot of my colleagues, I see that there is a absolute dearth of possible solutions, risk solution that is not there. Even if whatever solution that is available in the market is either very costly, or they are all owned by foreign international companies, and those are not very customized to Indian problem statement. So in India, I have seen few guys, they have worked. I have seen one of my colleague used to work in Razorpay. He actually resigned and started his own company on chargebacks, on dispute and risk management. And he is doing wonderful. So I think that this is the very right time. If you have the capability, if you have the understanding, and you should come down, launch your product. First, you need to understand what is the problem statement. Don't do a very high level job. Please understand what is the problem statement for a bank. You first need to identify what is the product you want to make, who are the possible client for you, what is the problem statement that the client wanted to solve for, and then come back with that particular solution. Don't come with a very generic solution which is not going to help anyone. That's a good answer.
I'm so sorry, sir. Actually, I was facing a network error. I'm so sorry for
No
that.
need for
I
the
was
answer also.
I will not be able to see previous questions because I rejoined it.
Okay.
Yeah, actually, I'm still facing a little connectivity issue, and I would like to request everyone, guys, please write down your question once again if we have missed. I'm so sorry.
Yes,
Okay, so
somebody is writing that now various courses are available on IIM. Yes, I know. I am I think South this they came up with certain course, risk management, enterprise risk management, and so I've actually gone through their course details, right? Means the subject line says risk, but when I'm not saying that you should not do good. Go ahead and do it. Please go ahead and do it. But what I'm trying to say here is the core risk that we handle is not what they are teaching. They will give you a upfront understanding of what is enterprise risk, what is fraud risk, what is regulatory risk. But again, for a specialization, there is no course that is available. That is the problem statement I'm saying. It is like that you have done your graduation, but there is nothing that is available for master. Unless until you do the masters, you cannot call yourself a SME, subject matter expert. That's the problem statement that we have. A generalized risk course is available in IIM definitely, but the subject matter expert things are not still available. That's the problem.
okay, sir. Another question, Mr. K. N. Rishikesh is asking, what are the precautions one can take against risk due to external factors such as recession, pandemic, war, etc.?
No, so pandemic and all, nobody can prepare anyone, right? Means you cannot really possibly create a backup plan considering your pandemic. I can give you our example. We Pine Lab, what we do pause machines, right? We go to shop, we deploy the pause, and we are the most impacted because the moment pandemic came, and the problem statement was when pandemic, the lockdown was declared, it was only declared for 1 week. So what has happened? We gave our feet on street a week's holiday. We arranged training. We prepared ourselves for train them. Right? We saw that as a golden opportunity. It is a free leave for 1 week. Nothing is going to happen. So we gathered everyone in different pockets of the country, and we wanted to drive certain trainings, considering that after 1 week everything will be normal, and these guys will go back and will have refreshed, and with a wonderful training they will be able to deliver more. But that never happened. From 1 week it one came to 1 month, from 1 month it came to 6 months, then 2 year or 3 year. So that was the problem statement, and nobody could have anticipated that could have happened, right? So, and we impacted because even if there is no lockdown, the problem statement is the shops were closed. where the person will go and deliver the shop, means the shop itself is closed. So they cannot, there are situations like pandemic and all that cannot be, you cannot really create a backup plan for that, because that is devastating for any country's economy. That cannot be planned. For other external things, you have to, I have already given you five parts. One is fraud risk, enterprise risk, regulatory risk, brand, and financial risk. These are the main pillar of risk management, and you have to put yourself and your company on those aspects, and then you have to create the risk register. So what we do is we create a risk register and we write down that what are the risks of doing this business. And we never put pandemic in the register because that is something very ultimate. What if tomorrow a meteoroid comes and destroy the earth? You cannot plan for that, right? You cannot have a backup plan for that kind of event. So we don't talk about all those God forbidden things. So basically, what we discuss, the risk register will take care of those elements which is under our control. Some kind of hacking, some kind of external threat. What if we have an office in BKC? What if in Mumbai some kind of event is happening, some kind of like farmer protest was happening in Delhi, that happened in Mumbai, and the Mumbai, we were not able to operate out of Mumbai. So if we are not able to operate out of Mumbai, am I saying that we will stop all our operations, back office operations, will not transfer money? That doesn't happen. So we need to have a backup. For example, in case of a bank, right? Whenever you do a money transfer, there is a back office that happens, right? Somebody has to approve, somebody has to do a reconciliation. Bank, mostly the bank will have their head offices or operation center in Mumbai. But there are events, I'm sure many of you stays in Mumbai. In monsoon, extreme monsoons, there are water logging. People cannot go to their house. Then you have to have it. So does that mean that you will say that because the bank is closed, no money movement will happen? No, it still happens. So there are BCB plans. So you have people working out of your Noida, working out of Chennai, working out of Hyderabad. So those are BCB plans. So that is what the risk register will capture. That in case the bank, a particular center is not able to operate, maybe there is outage, electricity outage, internet outage in Mumbai or in that particular city. So can that particular organization still be able to manage their customer, their softwares or their applications from somewhere else? This is what is external factors, and we call it BCP. We call it risk register, and we capture it and we put it in risk register. Certain things we can say that this is controlled and this is how we will control it. There will be certain things which we cannot control, and we'll call out that even if this happens, yes, business will lose, we will not be able to handle it, so be it. So it is very important for a risk professional to identify the risk and capture it, so that there is no surprises, right? There cannot be any situation where the risk professional can say that, oops, I never thought about it. That cannot happen. You have to think of all possible permutation combination, and you should have a process to mitigate. There can be certain situation where you may not have some kind of mitigant, that you possibly document and move ahead. Yes.
Okay, another question Mr. Ashok is asking, 100 crores are getting siphoned off from Indian banks every day. How is this risk managed?
When you say siphoned, it is primarily moving out of the country, right? There are two aspects, couple of aspects to it. When you say siphoned, what exactly this means? Are you saying so one of the aspect is people are moving the money out through Hawala. Okay. So that is one of the channel. The second part is the gaming industry, the online gaming, the Satta gaming and all. There also that's a great challenge for us, where there are a lot of apps that is available. People play, people load money, and then those monies goes out of the India. Mostly these are Chinese apps. You will not find these apps on Google Pay or Apple Store. These are all, you can simply download it from some websites. These are not available. You install it, you load the money, and then the money will move out of the country. That's the problem statement. So it is definitely a challenge, and we are working with the government to find out a possible solution to it. Government RBI has actually came up with certain guidelines. The recent guideline was cross-border transaction guidelines. Earlier, we have seen, even we identified few of the merchant which was associated with us trying to do something similar to it, but obviously we were able to identify in very early days of their onboarding and was able to stop it. It is definitely a problem. It is definitely a big problem. Again, I told you that currently there is no tool which is available which can give you 100% security cover from this kind of events. Out of 100 crore that is going out, we are only able to identify possibly 10 CR or 20 CR. The remaining 80 CR is still going out unnoticed. Even we will not came to know about it. What should be a possible solution? Again, teams are working. Fraud Ministry of Home Affairs is working. LEA teams are working. All the other enforcement directorate, FIU, these are all working to create a AI model which will possibly able to identify this kind of trends. Otherwise, it's very difficult. It is not that easy because whenever this money goes out, it's very difficult to, because when you say 100 CR, it is not a single transaction. Please understand. It's not that one single transaction initiated from some bank account and getting created to China, right? That doesn't happen. When the money moves 10,000, 15,000, 500, 60,000, 70,000, that way the money get distributed and goes to different account, from different account to different account. But ultimately, someone is orchestrating, ultimately, everything will merge on the element. So that's how it happens. It is not a single transaction of 100 CR or 1 CR that is happening. And that is why it is very difficult for us to identify.
Okay. Another question. How do you balance innovation and compliance in a fast evolving digital banking environment like Pine Labs?
I'm sorry, I did miss the question once again.
Okay. How do you balance innovation and compliance in a fast evolving digital banking environment like Pine Labs?
It is a wonderful question, and I wish I have the answer for it. Yes, it is a problem statement of the day. Many of the companies, fintech companies, even banks are facing it because innovation is something that we need to do. We cannot say, unlike our banks in a decade ago, uh, they used to have a simple product, right? Either FD, current account, savings account, that's it. Nothing more, nothing less. Now innovation is the, and there is so much of competition today that even in Pine Lab we have so much of competitions. Even every sector there is so much of competition. The only way to ensure that we still remain relevant in the market is innovations in product, innovations in offering, innovations in customer experience, customer satisfactions, and all. The problem statement here is many of the time the boundary between innovation balance between innovation and the staying compliance is very blurred. The problem statement here is, what I felt is, even the regulator do not have a very clear understanding what should be the boundary. That's a problem statement. Because the product that we deal in, the Pine Lab or Razorpay or PayU or whoever is, any new bank dealing in, it's very pretty new, right? It's not a very old products. It is not a current account. It's not a credit card. We deal in payments. We deal in UPI. These are all new age products, right? Any new age product, if it need to goes through a innovation journey, and when it goes through innovation journey, the regulatory framework also need to upgrade themselves. They cannot become a hindrance in the innovation itself, because the moment you stop innovation by virtue of regulating that product, the product itself will die. The best use case example is prepaid. In 2019, 20, 21, prepaid was at its peak. I'm not sure how many of you understand prepaid instrument, Paytm wallet, prepaid instrument, PhonePe wallet, prepaid instrument. They had done so much of innovations on prepaid. Like there is, at least I have personally worked with at least 3 to 4 companies on prepaid, loan on prepaid. I think there was a company called Uni. You get a card, you spend something, and you have to pay back in 3 installment, right? Then you have for blue collar employees, salary card was there. So many innovations. Let's not get into example. But what happened ultimately, RBI in 2022 or late 2021 came up with lot of regulations which actually killed all these companies, and all the innovations goes in vain. All the investment that the fintech has done, or the investors or FI has done, all goes in vain. I am not blaming RBI, but possibly they were really harsh on those companies. They could have done little better. So all I'm trying to say here is there has to be a balance, and there has to be a regular interaction with RBI. Innovation cannot run on its own, neither the compliance. So both the innovations that is driven by the neobanks and the fintech and the regulator, which is RBI, need to come onto a board, need to come onto a table and have the discussions. RBI actually came up with something very wonderful is innovation hub. They said that you do whatever innovations you do, but you keep us in loop. But that didn't succeed. Means none. I have not seen at least that succeeded. But it is very important that both the regulator and the fintech should work hand in hand to come up with some kind of new innovation. That's I think couple of years more it will take. But right now, yes, there is a clash between regulations and the innovations, and yeah, that's going to happen for at least couple of years now.
Okay. Another question is asked by Mr. Saket. He's saying, I'm a director of a cooperative bank. Based on your skill from banking industry, can you elaborate ways to identify fraud risk?
Fraud risk again means for a cooperative bank or any other industry. If it is
He didn't mention that.
anyway, I'm assuming for a cooperative bank the fraud risk. Now, what would be a fraud risk in a cooperative bank? Bank means again trust. You are holding money for others, right? What can be a fraud risk? Fraud risk is you are holding money for others, and you have to ensure that the money is safe. No one else is able to hack. So what happens if you have seen the example of Bangladesh, one of the bank, I cannot name the bank, but what happened in Bangladesh, the money that the bank was holding was taken out to different bank accounts in different country altogether. So half of the money went to Sri Lanka, half of the money went to Maldives. When the RCS happened, it happens that the Swift code used to be with one of the senior guy, and that got compromised. So what happened? Some hacker got he actually saved that Swift code in his laptop or desktop in some notepad, and some hacker has logged into that hacked it, and got access to the password, and he simply opened the Swift and moved the entire money. That is one of the frauds. So you have to really work on securing the network, securing the. So can I say that is it a fault of the customer? No. Did the customer reveal the OTP? No. But still the money has gone, right? So that's one problem. The second problem statement was again happened with a very small bank in India, Cosmos Bank. It's still there, but RBI has actually merged them with PNB, I guess so. That bank no longer exists. So I think it's in 2018 or somewhere. What has happened is, you understand ATM card, right? ATM card and debit card, you understand. What happened? When you go to a shop, whether online, offline, you give your debit card, they authorize the transaction. How it actually happens? The transaction comes to the issuer bank, and the bank will check your bank balance and approve, right? That is how it works. If you don't have balance, will your debit card get the authorization? The answer is no. But what has happened, it's very interesting use case. It happened in Cosmos Bank, and they realized after 3 days, their customer went to a went to a shop, swiped the card. The transaction actually came to the bank. When we say come to the bank, there are multiple layers. It's not that the transaction directly come to the bank. When I say directly come to the bank or online transaction, it actually comes to the core banking solution, core banking system. The core banking system will identify, read the transaction, will check back the account, customer account. If the customer account is in good standing, enough money, it will approve. Otherwise, it will disapprove. That is how it works. It happens within fraction of a second. You swipe the card, the transaction approved. What has happened? The hacker actually interpreted the transaction before it goes to the core banking of the bank. They put a software, a malware there. What was happening? All the transactions that is coming to the bank system was not reaching the core banking. It was not, the malware was not allowing the transaction to reach to the core banking, and core banking read the balance of that particular customer and approve or disapprove. The malware itself is acting like a core banking and approving the transaction. So the customer, and it was not a single customer, multiple hack happened. So customer possibly have 10,000 rupees in bank account, and the transaction coming as a 2 lakh rupees is getting approved. And that is how crores rupees gone out. And obviously the bank has to bear all those amount, because bank has promised to pay that amount, right? So this is another issue which I feel that banks need to know how this happened actually. Because bank has a core banking system, but their info security aspect was not that strong. So for a bank, I believe bank need to invest heavily on info security. I have seen small banks still not have the updated info security, because these tools, these softwares, these firewalls are very expensive. It's not that cheap, and the bank cannot create their own. That is not their domain. So the problem statement is small bank cannot invest on those firewalls, all those info security systems, and that is where the hacking happens. So I think this for a small bank, they need to really invest on the technology, invest on the firewalls, and definitely the next and last thing I would like to say, trainings to their customer. I have seen people, for example, the Bangladesh example I have given, person was not supposed to store password in the laptop, right? That is not expected. He should have written it somewhere else, but should not be in the laptop. That's I would not say that person has done it intentionally. He was not thinking that somebody will hack and somebody will able to read that password. That was not on top of his mind. But it's a lack of training. It's a lack of training. I've seen banks person who put the password in the laptop itself or in the desktop itself. It's a lack of training that we have to do a lot of training to those customers, to the persons. So I think that's very important for a bank, for a small bank.
Okay, before moving to the next question, we have one session feedback form, and I would like to request everyone, guys, please do fill it out.
I think we are also mostly out of,
Yes,
yeah.
we'll take few more questions. Okay. Uh, Now also we are getting question related to career and certificates. So someone is asking, would you suggest some practical method to work in GRC, and is CRISC a good certificate to start with? If not, then which one would you suggest? This is okay.
Then you
So
complete your question, please.
yeah, this much is question.
Okay. Yeah, CRIC is a very, means I would say it's a very strong certificate. It gives you a boost. It clears your understanding, and GRC is definitely a very strong method of. So there are multiple ways to manage risk. GRC is one of them, and there are certain certificate which will always prepare you as a baseline, so that you can always jump onto any career. So if you have a GRC CISRC certificate, that will enable you to get into a manufacturing or a info security or a payment anywhere you can. So that's definitely a certificate anyone who is really serious about risk should do. And why in India there are a lot of certification that is available. Somebody mentioned IIM has start coming with some certification. There are certain certificate like certificate Certified Fraud Examiner, CFE. It's quite a costly certificate. It costs more than a lakh rupee. But yes, if you are really serious about risk, guys, you should go for it. Definitely, it's very important. And it will be very helpful for you in the career.
Okay. Thank you for answering.
Somebody is writing why my question is not being answered.
We have taken his question. Actually, all questions got shuffled. So, and in between, I faced network issue. Because of that, also, I was not able to like see questions. Another question is, hi, sir. Currently, many players are offering AML robust softwares. Do you think this is a niche area for startups by experienced people in AML core concepts?
No, I did not understand the question. Can you just
Okay.
repeat yourself?
Yeah, sure. Okay, so he's saying, hi, sir. Currently, many players are offering AML robust softwares. Do you think this is a niche area for startups by experienced people in AML core concepts?
Many fintechs are offering AML softwares. I have seen few of them. So there are two parts to this question. Means first of all, there are a lot of fintechs who are offering this solution. The problem statement is none of those solutions are up to the mark. I have seen, and I can take responsibility when I'm saying it. I still see that there are fintechs who came up with this kind of applications, and those applications are absolutely not helpful. AML is a different chapter altogether, and I see that a lot of AI and machine learning should be involved. And currently, what has happened is in the industry, RBI has given license to so many fintechs. Okay, now as just because many of the fintechs has got the license, they have to demonstrate that they have all the applications, all the tools, control tools. Now, and that is the reason there is opportunity that got created in the market, and now many of the fintechs or the newly regulated entities are looking for some kind of application just to be on the compliance side of it. Whether those applications are actually making sense, actually helping to avoid money laundering aspect, actually effective enough, I really don't think. I have my own doubts. Now, coming back to the second part of the question, AML, yes, AML, just like risk, AML is again a very important topic. And my experience is it is more relevant and critical if you wanted to prepare your career or do your career as an AML associate or AML analyst or AML expert, SME, because it is very much important. The dynamics has changed for the country. Those days are gone when the it was criminal offense, means we are more of a local crime, right? What used to happen earlier, there's a local crime, somebody will murder someone, somebody will ask for some kind of someone will take someone custody, ask for some kind of money to release, and those days are gone. Those are still local level. Today's crime is in a different level altogether. Now people are moving money from one country to another country, hawala and all. So this AML is very important, and trust me, we do not have any training, any resources who are able to manage what we do in my organization or any other organization I could speak to. They actually hire people from different department, and they do some kind of training and become a AML associate. So if you are able to become a AML associate or AML risk subject matter expert, I think you have a very bright career in the organization, because it is now a mandate. It is now a mandate, and ultimately, I believe that this AML will be mandated not only to the financial sector. I believe lot many industry also need to ensure that they have to hire some AML resources and AML applications. So I think AML is the career that is going to come in the years to come. At least in next couple of years, you will see that lot of vacancies for AML, subject matter expert, principal officers, all those things are going to come. Okay. Anything else, or we can?
Yes.
Okay.
Actually, we have so many questions. We will not be able to take all the questions. Uh, so let's take the last question for the session.
Yeah.
Okay, Ravindra has asked, what role does AI/ML play in enhancing predictive risk models in banking?
So I'll tell you that risk can be, so one is the orthodox risk management, and then there is a new age risk management. The orthodox risk management is always based upon learnings and experience. What has happened, we will learn from that mistake and we will create mitigations to it, right? For example, the two example I have given, one is Cosmos Bank and the other one is Bangladesh Bank. We know all those issues, right? And I will ensure that I have compensating control in case something similar happens in my organization. So all my mitigations are driven by the experience learning. The experience and learning may not happen with me directly, but I have a way to learn it. Somebody else possibly got impacted. So currently the risk mitigation is through your learning, what you have experienced, what you have faced. Some kind of fraud has happened with you, with someone else. You learned that and you created that mitigations. You know that, okay, this may also happen and this is what my control would be. AIML is now, okay, come, before even jumping onto the AML, does that mean that you are able to take care of the risk 100%? Is there, can you guarantee that nothing can happen? No. You can say that if that could have happened, if that modus operandi got repeated, you have mitigant. But if some new thing can happen, some new actions, new method has been applied, you will be beaten for the first time, and you always ensure you are always reactive. So something has to happen. The fraudster has to do the damage for the very first time. You will do a RCA, you will identify what has happened, and then you put the mitigation so it doesn't get repeated. So the risk mitigation is always reactive. Using AI and ML, we are making it proactive, right? That means we are getting one step ahead of the fraudster. So it actually reads the in between. It always, in through machine learning, we are able to recreate, we are able to process a huge chunk of data. Now I can give a simple example. I don't want to drag this on this particular point. As I just told you two examples, one is Cosmos Bank, Bangladesh Bank. I can give you another 10 examples, 10 different modus operandi, 10 different incidents. So I could have created a risk management framework considering all those 10 or 20 different incident and create that risk framework. But when it comes to the ML, machine learning and AI, that could have considered thousands, crores of different incidents while creating that particular risk mitigation technique. So the point is that, does that mean that AI machine is better than person? In that analytics, yes, their processing powers are far superior than a human. My memory is short. I will not be able to process any risk mitigation method beyond a particular maybe 1 year, 2 year, 3 year. But when it comes to a machine, it will take care of possibly last 30 years different event and come back with a. So that's the difference. One is reactive, which is human driven. One is proactive, which is machine driven, which is AI. That's my one short answer.
Thank you so much, sir, for answering all these questions. So, there are so many questions, so I'm so sorry, guys. So before ending the
One
session
one
is
last question. One last question, and then that's it.
okay, okay,
One
okay,
last question.
okay. So last question is, in the Indian digital ecosystem, mass scale app download often involve unchecked access permissions to location, contacts, camera, etc. Particularly on devices manufactured outside India. From a digital risk and AML standpoints, how do you assess the systematic and geopolitical risk stemming from the behavioral pattern, and what role should regulatory framework play in mitigating potential national level data exposure?
So, with wonderful question, and that is exactly the DPDP is trying to get into.
Arush,
So,
mat kar.
DPDP is data protection, but right now, what is the problem statement is, uh, sorry, am I audible?
Yeah, you're audible.
Okay, okay. So the problem statement here is, you have a new mobile phone, and because of internet you have access to anything, right? Means you can access any tool, anything, either it is published in Google app or it is outside of Google app, you can download. Now the moment it can be downloaded, it will definitely ask for your permission whether you should give your access to anything and everything. I believe the role of government would be secondary, the role of the public would be primary. I have seen people, sometimes I have done it, and my kids also do it. Whenever I try to download a game, I'm just giving an example, try to download a game, my objective is how soon I can start that playing that game. I don't really care that what are the permissions I'm granting. Even most of the time, I don't even read what he's asking. Yes, yes, the that should not happen. People should have at least understand the risk they are talking about, because it is not only lead to a individual risk. You yourself may not get impacted because there is no financial involved, possibly it can go worst also. But what I'm trying to say here is, by granting this kind of things, so you are also granting a access to your movement, right? And definitely, if that happened, and let's say out of one person having that access is fine, but let's see a group of person, a city, entire city, or an entire country got that kind of access, then it's very difficult. Then the data is going out. Those persons are able to see what you are doing, where are you moving, what is your likings, what kind of, for example, let's say there is two political rally that is happening in two parts of the city. Somebody will come to know that which political rally you are in, right? Where you actually went. Is it the political? So that's something. So I think people also need to be very careful when they are approving any permission. And the government is working on this. For example, DPDP is one. The problem statement here is, can a rule rolled out by a government will be able to solve this? The answer is no. We have do not disturb registry, right? What we call. You get all the, but does that, I have registered myself in do not disturb registry, right? Can anyone say that they don't receive a single call on a day? I receive at least 10 calls in a day from a mobile number. Sir, credit card le lo, sir, loan le lo, ye le lo, le lo. So, rule, guideline, regulation will not be able to solve it until unless there is people who are, and there is a portal where you can register the complaint. If you receive a marketing call, you can go and put that complaint. I'm sure none of them us do that complaint, right? And obviously it is not implemented. So it has to be both way. Government definitely working the DPDP part of it, that will ensure the data privacy and data. So that will at least ensure that if you guys have gone through the DPDP circular and the guideline and the thing, it will say that what data you can capture, how to capture, what kind of consent it is required, where to keep it, till how long you can keep that data, what can be the usage of that data, will you be able to share that information with someone else, can that customer has the permission to ask for a withdrawal of that permission. All those things are there. Implementing all those things in India, I really have my own doubts. We are not US, we are not UK, so I have my own doubts. We'll not be able to implement that.
Thank you so much, sir. Still, lots of questions left. But guys, I would like to request, like, if like we have missed your question, you can reach out to sir also directly. We have tagged him on our social media post, so you can reach out to him. He will definitely help you out with all the answers there. And before ending the session, sir, uh, Is there any piece of advice you would like to give our audience?
So it's a very general gyan kind of thing, maybe cliche. So this is what I believe, that most of you maybe looking for a career in risk or AML compliance or something, or someone of you already into that particular career thinking. So please don't guided by just the fact that this is risk, some kind of challenging career. No, if you really believe from your heart that this is something I wanted to do, then only come. It is not something, please understand, if you don't love the career, if you don't like the job, as I told you that there is no 9 to 6. For a risk guy, it is always 24 hours, 24 by 7 kind of task. If you are not really ready, and if you really think that it is just a work for you, it is not a something very close to your heart, you should not be even get into it. There are far better opportunities, far better career, but risk is always very difficult, very stressful. It will always come on a day when you are least prepared, and you possibly planning to go with your movie with your family, wife, girlfriend, whatever it is, and you have to step out. I have seen, I was in a movie theater and something happened. I have to come out of the movie theater for next 1 hour. I have to be on my call, right? So you just need to skip the movie. So that's, but that I like it, right? That is what I have prepared for. So that's it. But yes, AML and risk is a very important career, very interesting career. If you are able to do a lot of if you can have some kind of certifications, I think you will excel. And there are a lot of opportunities here. And I think, yes, anyone who is interested can always connect with me. I can be of a kind of guide. That's it.
Yes, yes. Thank you so much, sir, for delivering such an engaging session. We truly appreciate your taking the time to share your knowledge with us. And a big thank to everyone who joined us today. We hope you found the session useful and informative. And if you'd like to revisit this session or share it with others, the recordings are also available on our LinkedIn page and YouTube channel. So until then, take care, stay curious, and keep learning. See you all next time. Thank you once again, sir. Bye bye.